This is the weekend trading report for February 28th, 2015. We've got a market that's in bullish quiet. That's good for the long side. On an annual basis, using weekly RSI 14, it's at 61 out of 100, slightly above the halfway line there in neutral territory. Looking back 10 days, we're at 55 out of 100 on the NDX 10. So we're still in the middle of neutral on that measure as well. We've had a couple days of pulling back. Looking at the market mosaic, price with respect to the 200-day moving average is at 6.26%. That's white bullish. That gives us 4.25% cushion between the current price and sideways markets. The slope of the 50-day moving average is green bullish at 0.55. That's also favorable. ADX 14 is at 21.7. That's neutral with respect to strength of trend, but the ADX is improving. Last week, this time, it was down around 15 and rising. So the trend is getting stronger, and it is bullish tendency because the plus DI is stronger than the minus DI. So we're moving towards a trending market. Haven't gotten there yet, and the fact that bulls are in charge, I take as a favorable sign. ATR percentage is 0.67. That's why it's quiet. That's a very low rating on ATR percentage. The risk index is the 30-period moving average of the VIX divided by the 10-period moving average. That reading is 1.16. So it's above the 1.0 threshold for risk off and risk on. So that puts us deeply into risk on conditions. When we take that score of 1.16 and go back and compare it to the last 5,000 days, find the standard deviation and the average, that gives us the risk Z score. And that risk Z right now is 1.89. And this is a 90-day time series of that indicator. You can see that it's a smooth indicator. The most recent move has gone from a Z-score of about minus 2.5 all the way up to about a plus 2, and now has had 2 days of backing off. So what we've got is the risk Z rolling over after a really nice swing move up, and we've gotten just a little bit more volatility starting to creep back in, and it's making the turn 2 standard deviations above the long-term average. And so what that means is it's time to ensure that your stops are in for any swing trade positions that you have, and to be prepared for a change in the volatility regime. The last time that it rolled over from a height of greater than 2, there was this long move down here from plus 2.5 to minus 2.5. Was about an 8% sell-off in the market. That was the last sharp sell-off. And so we want to be aware of that situation, that we've had a nice upward swing here lately, going from 200 to about 212 in the S&P. And that's a move that we want to ensure that we have captured our profits. These are the holdings for the blended month rebalancing going forward. With the next rebalancing due on or about 1 April. It's based on the closing prices on Friday. In ETF 2, the theoretical exposure of the model is at 90%. The model portfolio that we're tracking is 100% exposed. We front-run it a little bit. Reminder that the Kansas City workshop is on from 5 to 12 June. Still time to sign up and take advantage of that. We've got 18 folks scheduled so far, and I'm expecting some more. So this one looks to be like it's going to be an excellent workshop. Can't wait. All right, moving on. All right, next up is just a quick look at the ETF 13 and 32 portfolios for blended monthly. You can see that the ETF 13, only Latin America is on a cash signal. And that's priced with respect to the 4-month moving average. And you can see, even among the large indexes, the advantage of being on the right side of momentum, on the correct side of relative strength, even in this small population. In the last 3 months, treasuries have returned 8.5%, while Latin America is down almost 14%. So there's quite a difference in between the strongest and the weakest. Sorry. Stand by. Sorry. In the background, that was the video of the coaching session just finished processing. So there we are. We get back to normal. All right. So yeah. Now, if you look at ETF 32, again, it's we've got China and the treasuries at the top of the stack, and then some large cap U.S. Sector spiders, consumer discretionary, healthcare, and consumer staples. Those were the big winners from last year, and they are remaining near the top inside the U.S., so I feel comfortable owning those. You can see there's still about a quarter of the symbols are still in cash signals, and these tend to be the overseas or commodities-based ETFs. Like there's Brazil, blended commodities, Latin America, emerging Europe, energy, the BRIC countries, and agriculture. So most of the recent trends of the last, say, 3, 6, 9 months are still in place, although I would notice that some of the sectors like Europe, the EAFE index are starting to improve, and the small caps are starting to play catch up here as well. I think it's important to notice right now that IWM is in position 8, and it's up 5.5% over the last 3 months, and the S&P is only up 2.5%. So what we actually have here is potential development of the rotation inside the U.S. From the large caps, which have dominated the last year and a half, maybe rotating over towards the small caps. So we need to be aware of that. That makes IWM and TNA and the TF futures contract still attractive short-term candidates for as long as that outperformance continues. That's a relationship we want to monitor carefully. This is the sorry, I got laid back up one. This is ETF Max, and these are the symbols that out of the ETF database, about 1,200. These are the top 50 or so. You see at the top China, biotechs and pharmaceuticals, all over the place. Small cap healthcare. India still remains among the top 20. So it's a continuation of previous trends still in place. Next one is the S&P 500, the top 40 or so in the S&P 500. In addition, showing what their sector spider they're a member of. So you can see Hospira is a sector XLV, which is healthcare, Electronic Arts, and XLK, which is technology. Biogen and XLV is the first green and white. So I like green and white because that says that the outperformance is what gets it a color of green, exceptional outperformance compared to the peer group. And white just means that it's above average. So in the case of Biogen, for instance, green and white means that it's really starting to pull ahead on the 3-month performance, and there may be more room in it for long-term gains. So for instance, you look at the top two, Hospira and Monster, those things are up almost 60% over the last 6 months, whereas Biogen is only up 19.5%. So in theory, Biogen has a lot more room to go, and so we're maybe catching it earlier in its performance curve. And so Harman in position 17 is green and white. Bemis Company, BMS, green and white at position 21. And here's a couple that are really interesting. They're green and yellow. That's Newmont Mining is up 34%, 3 months, and still down 1% on 6 months. So we're definitely catching that one earlier in its life cycle. And then also the next green and white one is Netflix, up 31%, 32% over 3 months, and basically flat over 6 months. And International Flavors and Fragrance, also green and white. So that's how I use that report. Next up is the market health check. So we have these vertical blue lines are 10, 20, and 30 days of look back. The thick blue one's 30 and 60 days of look back. The horizontal red lines are now support levels that used to be resistance levels in the past. And if they fail, so if this support level at 209 fails, then the red lines become price targets on the way down, just using basic support and resistance, and also keying into the RLCO framework as well. The solid black lines are the 30-period regression line. The regression line is in the middle. The outer lines are the RAF regression channel formed by the maximum excursion during the look-back period. The blue lines, this blue channel is the 10-period. And what we have is price is fairly valued on the basis of both of those regression channels. They're both near the regression lines themselves. Price remains outside of the river. It's coming back to test the edge of the river at 210. This is the area of first support. I would expect that to hold if we're going to get another leg up. If we get another leg up, that could be another 5 or 6% that would take it up to 220. That's what we forecast for last week at this time when we looked at potential excursions. We've got this dark blue shaded area in the middle. That's the 30-period Bollinger Band plus or minus 1. That's the river. The lighter blue shade is the floodplain, which is the 30-period Bollinger Band plus or minus 2. And we have the dragon, which is this red ribbon, the 10-period regression line plus or minus a half. I want you to notice that the dragon is completely out of the river right now, and that's actually an unusual occurrence. Let me zoom in on that a little bit so you can see what I'm talking about. This area in here where I'm highlighting, you can see the dragon is completely out of the river, and that's an unusual condition for that to happen. And because price has been riding the floodplain all the way up and has been flirting with this Z plus 2, and now it's rolled over for a couple days. We had a doji, a lower low, and then another selling day. This has caused the dragon to roll over and get to the 12 o'clock position. It's basically flat. The slope of the dragon right now is flat, and this can be where it dives back. So what that means is, if the dragon doesn't hold and the river doesn't hold, then the next target to the downside, it would not be unusual to see it come down and test the Bollinger Band mean down here at 206. So we want to be careful here. That would essentially be a move that looks like we probably see something like this, and then the Bollinger Band mean extend And so if it was to be an orderly sell-off, you'd think it'd be around 208. But then, again, selling off happens a little faster, so it wouldn't surprise me to see something like this, even sharper sell-off down here to around 207. And that's why this 207 is a very important secondary piece of support. What I really want to see is this support level here at 209 and some change hold. And I'd actually like to see it hold here and go. And what we really want to see is a price greater than 212, and then that would be a sign to really go long, breaking out to an all-time new high. But if it were to hold here at 209 or here at 209, either one of those would be satisfying as well. And the bull, this emerging young bull, would still be in place. You can see right now that the parabolic stop and reverse stops that we've been tracked, that's these little dots all the way up. Now we basically have price resting right above this parabolic stop and reverse right in here. And so that's why I really would like to see it have an orderly entry inside the real body and then take off and then break out above 212. That would be very favorable. That would be typical and not unusual for a bull quiet, where we had a couple days of very orderly selling and the upward trend would still remain in place. Then that would be a very favorable condition. And then you would want to be on the strongest sectors as quickly as you can. And as long as we're above this red line, as long as we're in this green zone above like 210, I look at that as an opportunity to get long intraday as soon as I can. I don't wait around very long to do that. We're priced to get below 210 into this yellow zone, then again I would be looking to take the direction for the intraday trade based on the price activity. I would no longer have a directional bias, but my bias right now is to the upside. I am cautious, however, because we've already had this very nice move that has from this last area down around 202, and we've ridden it all the way up to 212, and the dragon has come all the way out of the river. So that says that's a time that you would not be surprised if the market took a pause here. On the other hand, this is the S&P, and we've seen some outperformance in IWM and in the emerging markets and in Europe especially. And so if we see strength in the S&P, we also want to scan those other sectors and then make sure that we are riding the strongest of all the sectors. In China, FXI right now is at the top of the stack as well. So that's an opportunity also. All right, let me scale this back to regular size. A couple other things that cause us a reminder to be alert is I'm highlighting the 30-period regression line slope. That's this black line. All right, that's that line that I just highlighted. That's the moving slope value of this 30-period regression line. And excuse me, let me clean this up a little bit. All right, so that's the moving slope, the value of the 30-period regression line slope, which we take, trying to highlight that very sloppy. These blue circles that you see are where it has crossed the zero line. The zero line is, the scale for that is here on the left. So the zero line is this dotted line that runs through the middle. And whenever this black slope line is above that dotted line, then the last 30 days have been up. So it's a nice proxy for intermediate market health and direction. Well, we studied the statistics on this one, and slope value of 0.4 or better we consider to be very steeply up. That's more than one standard deviation steeper than the 10-year average. And then on the downside, minus 0.22 is very steeply down. And so where we are right now is that price got as low as, wait for it, minus 0.22, at which time we saw it start to slope up again. In other words, instead of failing, where I'm highlighting, instead of failing, it reversed and went higher. And that pretty quickly caused the slope to turn. And what we said at the time was the slope is turning at a level that has been significant in the past. So when we see that happen, we are entitled to say this could very well be a turning point, and that makes this a local low. And so be prepared for a reversal to the upside, and fortunately that's exactly what we saw. Now on the upside, the extreme value that we care about is 0.4, and we're right at 0.4 here. The last time we saw a spike that large, it got up as high as 0.7, and then when it collapsed as low as 0.4, that's the last time that it went from positive 0.4 down to minus 0.22. So the slope value here is just starting to roll over on the basis of this short-term pullback here. And so we are aware of the possibility that the last time it went from 207 to 195, which is that's about an 8% sell-off. And so these 8% moves happen pretty fast. Here's one happened in 5 days. This was 5 days. This was 5 days. So even though it's taken us almost 30 days to move to the top, we could see it move from 212 back to 205, right just back into the river. That could happen in 5 days. So we want to be careful about locking in any of the profits that we have from the swing trades over the last 2 weeks. So enough on that. The last little piece of warning that we have from this chart, excuse me, is here with the percent price oscillator. You can see that we had the jaws open to the upside almost at the same time that the regression line slope gave us the alert, and it has been pointing to the upside until just Friday, when these 3 days of selling have caused the jaws to close, and it's at a pretty extreme reading. The last time they closed back here after a nice move up, you can see the kind of move down that we had. So there's any number of indicators right now that tell us that we've had a nice run, which we can tell by inspection. We've had 30 days of or 20 plus days of pretty much upward movement. So we have many reasons to ensure that our stops are properly placed. So manage that risk. Okay, next up is the ETF2 regional report, and you can see that we still have 9 out of 10 of the indices are on a buy signal. There's one on cash, that's Latin America. That leaves us at 90% invested, 10% cash in the theoretical model. And then right now EFA at 78 is stronger than the S&P at 71. And inside the U.S. it's technology at 73, mid cap 72, large cap 71, and then the small cap 69. The two strongest sectors are in the green. That's EFA, the Euro-Asia blend, and then Europe, IEV. And then the two weakest sectors, Latin America and Asia less Japan. There's a mixed bag of strength and weakness inside the sector spiders, with strength in energy, industrials, and utilities, and then real weakness here in consumer discretionary and basic materials. So there's some real differentiation inside the sectors. All right, next up is the world market model. Mixed bag inside the U.S. You can see the small cap value is very strong in the green. Everything else is above average in the white, except for mid-cap value, and small-cap growth. Kind of an odd distribution of strength, but really the large caps are where the average excellent strength is. See, Japan is above average. Latin America and emerging markets are starting to get better. Mexico and Brazil also above average. Canada is lagging a little bit. You got the Euro large caps and the EAFE blend above average. And now for the first time in many months, all of the countries in Europe are above average except Germany and Netherlands. Real strength in Indonesia and China. Let's see, we'll go back to the ETF 30 now. All right, so this is using the ETF 2 lens. And I want to just highlight the Spider S&P dividend, that's green and white. Oil service holders is green and white, and then a whole stack. And these tend to be the, so this is the EAFE index, the Russell growth, utilities, Russia because of energy, private equity, S&P value, dividend achievers, all doing well, all green and white. So plenty of new leadership moving to the top of the stack. Next up is the Dow 30. We have had a changing of the guard here. And Walmart has managed to move from the bottom of the stack over the last 3 months all the way to the top. Walmart and AT&T are the two strongest. You can see they're greens across the board in strength and consistency. Verizon, green and white, so we want to watch VZ. 3M, Triple M is yellow, or is white and yellow, so that's earlier in its rotation to the top, so its outperformance is happening there. And then the old guard of Pfizer, Chevron, ExxonMobil, and IBM are yellow and white, so that their shorter-term performance is weaker than their longer-term performance. And then at the bottom of the stack, things that used to be at the top, McDonald's, Caterpillar, Goldman, Microsoft, Travelers, and United Technology. These are all potential value plays since they have been, they are the laggards now in the U.S. large caps, which had been the strongest. So for value pickers, that might be a place that you want to look. Next up, we're going to shift to the daily report. No signals in the overreaction and channeling. You can see just how much volatility has come out of the market. If we look up here at the risk Z, you can see this move from extreme volatility to lack of volatility corresponded to this. That's this significant move in volatility here. So it's at a historically low level considering the last 100 trading days. So that's the last 5 months. So it's as quiet as it has been in the last 5 months, as measured by ATR percentage. So again, things stay quiet until suddenly, a shock happens, and then we're all flustered again. So we've got a number of indicators that tell us that the market is extended to the upside. Among the standard swing patterns, we have Intel as both channeling and overreaction. We have Boeing as a 5-day down. In the Autoframer, we have a dozen symbols that all test out very well, better than 2-to-1 on the Autoframer. So we'll take a look at a couple of these when we get to the charts of interest. Next up is the Dow 30 Tactical. This is the signals and channeling and overreaction for Intel. And the 5-day down here for Boeing. Should note also that Boeing is 4.5-to-1 on the Autoframer. We've got a half a dozen symbols that test out very well on the Autoframer. Chevron, ExxonMobil, no surprise there. Also, Intel is 2-to-1 on the Autoframer. I also want to raise your attention to Coca-Cola. It has no signals firing, but looking over here on the right-hand side under the NDX, I note that its 10-day NDX is 154, and its 1-month NDX is 113. What that means is there was a big breakout to the upside on Friday that was 50% the size of the 10-day trading range previously. If you took half of the previous 10 days trading range and added that to the previous 10-day high, that's how high the breakout closed in Coca-Cola. And then there was a 13% breakout, 13% of the 1-month trading range breakout to the upside. So that's a significant move in Coca-Cola, a great big move up. Alcoa, you notice on the other hand, has a negative numbers here for the 10-month and the 1-month. And so that's more like a washout where it's broken down to a new 10-day low and a new 1-month low, as has Intel, which made it 10-day low. That's what the highlighted numbers in the NDX section of the report alert you to. So sometimes we can see those kinds of indicators even if there's no particular pattern that's signaling at the same time. All right, next up is we'll look at the ETFs. And in the ETFs, we have 3 symbols that fire on the RSI2. That's VXX, MDY is a 7, and XLI, the industrials, is a 10. That's on RSI2. Those signal when the RSI2 value is 10 or below. That tells us there was like a 2-day harsh sell-off, and that may be a signal for like a parabolic selling has occurred, and that may be overdone. So that bears looking into. We got half a dozen signals on the Autoframer. We've got 3 frog candidates. Latin America and Brazil fired for the frog, as does U.S. real estate. But other than that, no patterns. All right, the last chart for the daily is just a summary of the Autoframer. You can see we've got a dozen symbols, ETFs, and large caps that all are better than 2-to-1 on the Autoframer, led by Boeing and the VIX. We'll take a look at silver, which is at 3.1. And then inside the regression line fractal framework, these are the ones that measure the difference between the short-term fair value, which is the 10-period regression line, and the long-term fair value, which we take to be the 270-period regression line, and measures that distance on the basis of ATRs. So Intel we're interested in because it's more than 7 ATRs below the long-term fair value. So that may be a value opportunity in Microsoft, not far behind. And then in the red down here at the bottom stack, these are the symbols that are the most number of ATRs above their own 270, and that is a sign of recent relative strength that may be continuing, or it may be a retracement back to the long-term fair value if there's no substance to the move. So in either case, we have the ability to frame longer-term trades on the basis of a difference of opinion between short-term holders and long-term holders. I generally vote in favor of it returning to the long-term value, especially when we're talking large caps, because that money cannot be hurried. Okay, next thing I want to shift to is the charts of interest. And this slide deck is posted in the chat room as well. So let me get this called up. So we're just going to take a look at a few charts. The first one is Brazil. I like Brazil. We looked at that last week in this location, and we were ready to buy it at 34.80, the green line, with a relatively tight stop. And I like the fact that it closed well on Friday. So if we can look at that a little closer. This is that RL270. So I take that to be the price target on the upside. Back when EWZ was in this choppy part of the channel, we saw the distance between the 270 and the 10 was this far, and we would have picked this price target up here at 45.20 as the price target. Never really, there were some small intraday trades that were available in here, but never really saw the follow through yet. And so this is a case where the longer term estimate of fair value has been declining steadily, and so now we use 39.20 as the new reasonable price target. And there's still a nice move here from 35 to 39 available, so that's $4. And then if we use something like a $1 stop down here, this is where that 4-to-1 reward to risk comes from, and we would set intermediate targets here at the river, at the far side of the floodplain, and then at Z+3. All of those are reasonable price levels, and then this previous swing high here, again, if it gets above 38, then we really do have a chance to get up to the fair value. But the fact that Brazil has held pretty well for 6 or 7 days and has had a couple spikes up here lately leads me to be optimistic. If we get a failure here below 34.5, then our price target is down here to 32.5. So again, if we have a $1 risk, that still gives us a 2-to-1. So now Brazil is high on my list of being in a critical state because we can frame a favorable 2-to-1 reward to risk ratio in either direction, and now we just have to let price dictate which direction we're going to take. Okay, so that's Brazil. Next one up is Walmart. So this is the strongest symbol in the Dow. And this is a case of one where this divergence from the RL10 and the RL270 was we get the meeting of the minds up here in the form of this triangle. They met at the projected intersection, which you just notice how steady that line of the 270 is, and that allows us to project its value forward. Well, what we have now is the last time that Walmart had agreement between the short-term and the long-term guys was back here in, looks like, November, when price was down around 75, and it got as high as 91, and now price has come back to join the long-term. So if it finds support here where it did the last time, that it found support at this level, it made this move to 91. So 91 remains the upside for me here. The fact that it, even after this little spiky sell-off, it still managed to hold. I like that it's holding at the 270, but it really has to show me something. It has to get above 85.20, and then I'll play it with $1 or $2 of risk, and then my targets would be 86, which is the Bollinger Band mean, 87.5, 89, and that gives us our price ladder of all the way up to the swing high. So that looks like a nice swing opportunity in Walmart. It's one that I will play with measured risk and taking care to protect my overnight risk. Next one up is Intel. So Intel was both a channeling and a overreaction and a Autoframer trade. And so what we have here is fair value up around 38, awesome, and the 10-period regression line down here at 33, and we have it finding support here at the bottom of the river at 33.25, and a swing low at about 37 or 32.5. Now, if we get a failure below 32.5, we definitely want to be short. We could actually play it short from 33.25 to go down and test here, but anywhere that it, if it finds support and reverses here, anywhere in that range, 34.75 is the target, followed by the far side of the river, the floodplain, and then the 270. And so the reason I like Intel is that technology has been strong. It's the last time that it found itself in support here was back in the end of November, and it went from 33 to 39 again. So we would like to see it come up and test 34. Even if it just comes up to test that gap, that's a nice move here in Intel, and that's a tradable move just like that one is. So Intel looks promising. Again, that's in the critical state for both directions. IWM, now I want you to think back to the recent chart we looked at for SPY, which had like those 3 days of selling. You haven't seen that in Intel up in this area. In fact, it's the opposite of that. You can see just how much stronger Intel has been. So what we have is the dragon is completely out of the river. The slope of the 30 is up. The 270 is up. Its price is above its 90 regression line. Dragon's out of the river. We have range expansion, volatility expansion to the upside, and we've had very orderly support levels here all the way up. So again, if we get above 123.25, then off it goes. This is a stronger pattern than we'd seen in SPY. So it would not surprise me that if the S&P was up and small caps are doing better, that's where the bigger intraday trade is going to be. So this is part of this rotation towards the small caps that we've seen quietly unfolding over the last 2 to 3 weeks. So that's my trade frame on to the upside on IWM. On the downside, if we saw it fail below 122, then the target is down here around 119.5, just on a retracement back to the mean. If this was an orderly sell-off and it went like this, by extension, we would see the target really to be about 120, which would be the top of this previous swing high. So those are the price targets on the downside. It'd be the 90. First of all, I want to see it hold by the edge of the river, then the 90 regression line, then the swing high being support, and then if those fail, of course, then the next is here, and then down here to the 270. So that's what that little triangle projection of prices looks like. So I'm in favor of IWM right now. It's on my short list and a good target in the futures. Last one to look at is going to be silver. The last time we framed silver on a swing was back here at the start of January. We liked this triple bottom down here. That's a quadruple bottom down here around just around 15. And we had a 1, 2, 3 entry here at 1540. And we had a nice swing move all the way up to just 1775. And then this was our exit signal here inside the RLCO after 5 days of selling off. Now what we've got is silver has come back. You can see how the dragon has rolled over and now has come to the bottom side of the river. And we've had some support building in here about 1560. And then we've had 3 days of support inside here. Actually, after this little bottom, we've had a gap up and we've got 3 higher lows. And so I like this at 16 My targets are Bollinger Band mean, swing high, far side of the river, where the 30 rolled over, and then the far side of the floodplain. So there's a lot of room inside silver here for this kind of a move. Failure here gets it down to 15 and a quarter, and then back over to 15 pretty quickly again. But I like the upside in silver here, especially if we saw some weakness in the equity indexes. Then this is a play that could work pretty nicely in silver. Okay, so those were the 5 or 6 trade frames that I want to look at to be ready for tomorrow. And pending your questions, that's everything I want to cover tonight. I will post the link to the coaching session inside the chat room, and then I will post the executive summary link in there as well. And the trade frames that we just looked at are already inside the chat room as a file you can download. So, pending your questions, say thanks for your attendance. Hope to see some of you guys out here in Kansas. We still got plenty of time. Remember that we're going to record all those sessions and make the presentations and the recordings and some commentary available to folks for distance learning to help us offset the cost of the conference, and then also to share the learnings that we've been doing. So we're pretty excited about that. So take good care, and we'll see you in the chat room then.